Hey Goku, so do you like Imagine Dragons ballin' on the court? Now imagine me dragon ballin', you know, the ball's on the court. I don't know what you were thinking, but it kind of looked a little sus. You're gonna be in the video today. You stay right there. I'm touching you, I'm touching you, I'm touching you. Hey guys, welcome back to the After Hours. I'm the eight-tailed beast, and today we're gonna talk about what happened this week. Now, this week in the penny stock market, we continued the tech rally from the last 2 weeks. Last thing you saw was a hype inside of AI. Now, AI, it's been going for months now, but what you need to know now is that we are currently at a 52-week high. Now, if you go back a full year ago, you'll see we're really close to the highs that were created then. What's causing this? At the end of the day, it's a melt up. Now, this melt up is disguised. It's disguised as a tech rally. Now, under that tech rally, a lot of people like to focus on AI. And when you boil down and peel off the layers like an onion known as AI, at the bottom, you'll see its language processing units. And this week, we've seen more of these same products released into the penny stock market. Now, ASST is one of the biggest penny stocks of the week. Now, the reason it's the biggest penny stock of the week is not just because it traded the most volume at 90 million volume, or it traded to the highest price, $100-something. No, what makes ASST really important is it goes to the core of the hype. Now, at the core of this hype, you see things that have been already made being portrayed as something new. When you look at ASST and what do? They are a digital marketing company. And what they're trying to market right now is their latest product, avatar merchandise. Now, when we think of avatar, we probably think of video games or the movie Avatar. At the end of the day, an avatar is just a character that you created. It's probably animated. You drew it, you blew it up, made it into 3D animation. Well, ASST is calling it AI bots. Now, this avatar merchandise, now you've probably seen something in the past in the form of a filter or something AI generated. Maybe the design itself is AI generated, but ultimately it's just another avatar that's been created. And you have images of being happy, sad, and everything in between. And then they put it on your face. And now ASST is charging $10, which is really fair. Now, the customers for ASST involve businesses as well as celebrities. They are creating a brand around the avatar. Some of these avatars are like NFTs. They can be rare, just like the recent AI hype when AI generated art started on TikTok and other social medias. Now, there are rare arts that come from AI bots. Now, some of these AI generations, they repeat the same art because that's how they're made. On the back end, 500 artists made a lot of work, and then they get smashed together and they create something new. Well, at the end of the day, the same thing is happening with the latest ASST. And you can even see rare avatars that come out. At the end of the day, this kind of reminds me of NFTs. And we saw how well that went, especially with big names like Logan Paul that lost hundreds of millions of dollars investing in NFTs that just flopped. Same thing with Mr. Beast and other people. Now, at the end of the day, everyone's just trying to make money, and that's what you're supposed to do. If you're in the market, you're investing, or you're trading, everyone has the same goal when you boil down their strategy. They're trying to make money and follow whatever the current hype is. Right now, the current hype is AI, and we have all hands on deck. You don't want to be too biased when you're trading penny stocks, because if you're too biased, you're going to become blind. You need to be able to see what's happening in reality. You need to ride the line. Without the perfect balance between yin and yang, you won't be able to create the Tao. What's happening? What is the market offering? You won't be able to see that. When we look at these hypes, we need to understand that the hype, it's real. And it's only real because it's self-fulfilling. And a lot of people, they don't actually believe in the hype, but they know that the power of stupidity is strong. I win. So in recent history, we've seen these AI moves turn into a little bit of everything. So we've been dealing with SPACs, IPOs, AI plays, things in the healthcare. And it's been sprinkled all over, but a lot of this came from China. When we think of China, it has its own everything. Now, what do I mean by that? Things in China, they keep the good stuff. Anything out, they consider it the bad stuff. iPhone, we have Chinese iPhone, you have WeChat, we have better Instagram, better videos, better everything, better pizza, just better. Now, when we talk about China, China usually goes out when there's something to be made, usually money. Now, we've definitely touched back on the 52-week high, and it looks like it's gonna keep going, especially after the Fed just remained unchanged in their decision when it came to rate hikes. Now, we know when it comes to Chinese stocks, they are very volatile. they usually become a pump and dump. In the past few weeks, we've seen things run with no actual catalyst. Now we say no actual catalyst even after we do diligence, but you can always find some reason why the catalyst is moving. You just have to look hard enough. If it's not on social media, if it's not in the filings, you don't see it in a major headline, well, I'm pretty sure you can go to China and you can see one guy made a phone call. Now, when we look at WETG, this was pretty much GPT. This went up to $23 from $8, and then it went back to $10 after a few days. Other than that, we also had BWV. Now, BWV, this is a part of the secular hype that's been happening in biotech, still a part of the tech rally. This one, it had a major resistance of 100 million. Usually that's considered unbreakable, meaning it's going to be really hard to get past that. But again, anything can happen inside of these penny stocks. So when you look on that chart, it only went up to 160. But if you go intraday, it went up to 195, the top of that major resistance. A lot of people thought it was going to break out, but at the end of the day, it didn't. Now, the last one I want to look at is ASST. What makes ASST so special is it goes to the core of the hype. Other than the overall market going bananas over the unchanged decision from the Fed, or following the technology hype from NVIDIA creating new highs in cash and developments of semiconductors and etc. ASST, it traded 90 million volume. It didn't go up too much. Unlike WETG going up 270%, ASS only went up about 250%. Now, this is a lot different than what's been happening recently with tickers going up tens of thousands, but having this amount of volume when the week itself is kind of slow leading up to the Fed decision, which was unchanged, that's what makes this very unusual. Other than the push at the open, this thing faded all day into the close. Now, a little more on what we saw last week. Unknown catalysts running. The reason they go up may not be obvious. You won't see it in the headline or social media or even the filings for the company. You ask the company directly, why are you going up? And they say, I don't know. It might have something to do with warrants. These companies, they have to get paid. They have expenses. And one of the ways they do this, other than having an offering, they have warrants. Well, with these warrants, they take the stock down or put it up, depending on where the price is executed. When they promote the stock and there's a big spike, volume comes in. That's because of some third-party promotion. When they want to execute those warrants, they can do it whenever. Everyone knows when the warrants are there, but you don't know if they're gonna do it the same day or a week after their promotion. They don't have to say anything about the news. But when you see a stock is going up, you know stocks don't go straight up. And when they come down, it's not necessarily because of a warrant. But most of the time, if there's no catalyst and the stock is going up, that's because they're trying to pay something. They have expenses. And before they do that, they have to pump it up to the execution price before they can have them executed. Now, what this normally looks like is the stock went up for no reason. It's running. We don't know how long it's going to run, but when it cracks hard. It's usually a convertible note, warrants, or some type of shelf offering. But if they don't do an offering, most of the time it's warrants. And that's why we look at gap up shorts and things with little to no spiking history. At the end of the day, we just focus on what is being offered by the market. And if it just seems a little bit suspicious, we get out, or at least we size down. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace. He says bye too.